Let's get some more detail on what's going on globally with the economy, how that's affecting investor attitudes at the moment. Clifford Bennett joining us now from ACY Securities. Clifford, a very good morning to you. So, what's your reaction to Jerome Powell getting another 4 years?
Good morning, Andrew. How are you? Very timely. Obviously, the market was excited, but that excitement was, I've just been checking the market on my phone here because things are happening rather quickly at the moment in the US indices. It looks like US futures are getting sold off massively. So we might have actually just seen on your show another big call, the all-time top in US shares for the moment anyway, perhaps for a year or three. But we've got a good stop loss, Andrew. If we make a new high, I'll be stopping out of that call. But the risk reward is there at the moment to the downside. We've been seeing these struggling new highs, and the market did rally on the back of the Powell announcement. I think most people were expecting it, but also they were a little bit concerned there may be a shift. It would have been unorthodox to do so, but it is a new president and a new administration, and anything was possible. So there's definitely some relief there, but in fact, for the economy, there's no change going forward with Powell staying there. And I guess that's sort of quite reasonable. He's behind the curve, like a lot of central bankers, not as behind the curve as Christine Lagarde, of course, or the RBA, but he is still a little bit behind the curve. And it means interest rates will be raised later, which means interest rates will be raised aggressively next year in a catch-up way behind the curve, which is just so typical of central banks. We just see it again and again in both directions, whether they start easing too late or they start raising rates too late. It's this sort of RBA approach. We're interested in the data, which means we don't want to risk making a mistake, so we'll only make sure that it's positively proven before we do anything. And of course, that's behind the curve central banking. Nothing of the kind of the great central bankers of the last century or even at the start of the century. So I digress a little bit, but can I just say it is really interesting that US equity markets have been getting good data on the day, on Thursday, Friday, and today. And they kick up, but they can't sustain it. Now, we are seeing new highs on the price, but we're seeing increasing volatility here within the intraday price action, big swings. And the move we've just had in the last hour is a very compelling risk off, at least for the short term and possibly for the long term move.
But hang on, are you calling the top then in US equities?
Yes. Yes, because Andrew, I love your show and I want to do everything to support the fame of your show. And okay, I'm going to say it. I think, and I did try to call this a little bit too early. So in 2009, I only called the bottom once and it was exactly right. For this top, I've called it 3 or 4 times now and been wrong. We've been right so far on Australian equities in calling the top a few months ago. We still haven't seen a new high there, and it does continue to languish and underperform as forecast. But for the US equities market, look, it's a bubble. There's no doubt about it. And if you're very wealthy, you should take 90% of your risk off the board. If you're wealthy, you should take at least 50% off the board or do a stress test. If stocks and property fell 20%, would you be comfortable with that? Otherwise, take risk off the board. If you are soon to be wealthy, not yet wealthy, then it's time to be very aggressive and active in trading because there are some very big new and different trends coming, and they could be to the downside. So just to be clear, on Andrew's show, I'm suggesting that the top in US equities was seen in just the last few hours. I suggest if you go with that view, you put a stop loss at a still new high. I don't think we'll see a new high, which is why I'm saying it's the top. And the risk reward to the downside opportunity there is massive. And there's, excuse me, we shouldn't fear it because it is normal to have a big correction. I'm thinking more than 10% from here. And I'm thinking we have all the tools to defend and manage our investment portfolios. But we do need to be thinking outside of the box now and just not assuming, I wrote a piece yesterday, no business should assume that whatever's happened in the last 2 years is what's going to happen in the future. We're entering a very different phase now.
Clifford, you say you call the top for the local market, the Aussie market. We saw that in August. So in your view, why has it underperformed to date? And you're obviously going to say it's going to continue to underperform.
Well, yeah, I think so. Look, um, th- I really do think that Australians have trouble perceiving Australia objectively in terms of how the rest of the world sees us. Now, I'm not going to go into the, we've upset China, we've upset France thing. I just mean in terms of do we have a competent central bank? That isn't necessarily the impression in other major financial centers. Excuse me. Do we have the ability to withstand a reduction in trade, which we are already seeing at lower commodity prices? We are seeing now declines in our metals and ore exports. This could be supply chain related, but certainly some of our biggest trading partners have declared they are actively seeking to diversify their buying, whether that be away from Australia or away from any country. And that is going to diminish our future. Australia's had an easy ride on the back of iron ore and our exports, and our economy has been saved by the Chinese growth phenomenon. There is no doubt about that. And it has masked us not doing some of the hard work we need to do to reform the Australian economy. We are an overtaxed, overregulated, narrow profit margin society that has been supported by massive trade. And the world going forward is not going to be of the same nature that it has been in the past. Australia is vulnerable, and I think the overseas investment community in other financial centres around the world is becoming very circumspect about holding Australian dollars or holding Australian stocks.
Clifford, I give it to you. You're not afraid to make the big calls. Thanks so much for joining us from ACY Securities.
Thank you, Andrew, for your encouragement. Cheers.